Hi friends, this is Amit Gaglani here. Let's look at the US stock market on Friday where it ended and what's going to happen next week. So on Friday, as you can see, the Dow Jones ended 260 points up to 23,775. Remember, Dow Jones has been going up and down, and it's really good for trading, buying and selling stocks in the short term. Couple of days Tuesday and Wednesday, it went down due to oil price crash, but then it came back on Thursday and Friday. Similarly, S&P 500 also went up by 39 points, as well as Nasdaq also went up 140 points, and Russell 2000, which includes 2000 small cap and medium cap companies, also went up by 19 points, and the volatility index was down by 6 points. So as I said, Dow Jones 30 index on Friday was up 260 points, and it started badly on Monday and Tuesday because of the oil crash, but then came back on Wednesday, Thursday, and Friday. But again, Dow Jones 30 just represents 30 big cap stocks like Boeing, Apple, Google, and Caterpillar and Verizon and so on, but it doesn't reflect a lot of other profit-making companies and which are doing well in this coronavirus environment. Some of the big earnings this week were Netflix, IBM, Intel, and Chipotle. So what happened there? As I say, Dow Jones doesn't represent the broad market. There are a lot of other stocks which has potential to go up, like Netflix, Roku, Zoom, Facebook, Estee Lauder, Amazon, Costco, Walmart, and Fortinet, which is a cybersecurity firm. So FANG earnings coming up this week, except Netflix, and some of the other notable earnings are Tesla, Visa, MasterCard, McDonald's, Starbucks, and Pfizer. So some of the big earnings last week, which came up, included Netflix. Now, Netflix earning per share missed the estimates, but the key number is number of subscribers, which almost doubled to 15 million during this quarter because of coronavirus. People are staying home, and obviously, Netflix is one of the cheaper medium to use. The other notable earnings were IBM and Intel, which also missed the estimates, and stocks were down. But Chipotle stock was up by 90 bucks because the earnings beat the estimates. As many of you know, Chipotle is still working during this coronavirus. They have been accepting online orders and you can do pickup. So Chipotle doing well. Some of the big earnings coming up next week, April 28th on Monday. Starting Monday to Friday, we will have Facebook, Google, Apple, Amazon, and some of the other ones are Visa, MasterCard, UPS, which is a shipping company, along with FedEx, Estee Lauder, Cosmetics, and Starbucks. These companies are coming up with the earnings. And let's look at analyze Facebook financials, and some of the key elements we will be looking at is what products Facebook has, where it operates, look at the financial statements, income statement, balance sheet, and cash flow. What is the current performance of the company? And then what are the recent news which can benefit Facebook? And then look at the stock price, past performance, and where it can go up. So as you know, many of you must be using Facebook, Instagram, Messenger, WhatsApp, and Oculus. And the major revenue Facebook has is their advertising revenue. Let's look at the income statement and balance sheet. Income statement, the top line, which is revenue, very healthy, from 27.6 billion in 2016, has gone up to 55.8 billion in 2018, so almost doubled. Revenue has almost doubled in 2 years. Similarly, their bottom line net income has also doubled from 10.2 to 22 billion, as well as earning per share, both basic and diluted. You can see from 3.5 approximately to 7.6. It's almost doubled. And you can see there are no interest expenses because balance sheet has no external borrowings. The biggest item here on the balance sheet is cash. From 29 billion has gone up to 41 billion, which helps them for various acquisitions, similar to other technology companies like Google and Apple. Facebook has also a lot of cash sitting on the balance sheet, and the working capital, which is the indicator of their uh, short-term health. Short-term health is really good. The working capital is 43 billion, which is their current asset minus current liabilities. And then total assets have gone up to 97 billion, out of which 84 billion is equity. So only 13 billion is the uh, external liabilities like vendors and payroll and other expenses. But as you can see, there are no capital lease obligation as well as no external borrowings, no borrowings from banks. So that really helps Facebook. You can now look at the cash flow. The biggest thing is operating cash flow, which has doubled from 16 billion to 29 billion, which is a key number. So should I say anything further here? That explains everything, that the cash flow is very, very solid. The As I just mentioned, some of the key highlights of the financial statements, the top line, bottom line, and earning per share, all three have doubled in 2 years. Huge cash sitting on the balance sheet, working capital, which is short-term health, indicator of short-term health, 44 billion. Long-term total assets have gone up to almost 100 billion from 64 billion 2 years back. Equity of 87 billion out of 100 billion, and no debt. The key thing is no debt, no interest expenses. And the cash flow, the biggest item, operating cash flow, is positive and has gone up from 16 to 30 billion. Now, a couple of big news this week. They're investing 5.7 billion in Geo investment in India, owned by Mukesh Ambani, who is the richest guy in Asia. And then they have also the Facebook rolling out free video calling, including up to 50 people, which will really help during this coronavirus environment where people are working from home and they need video conferencing. So that's going to be a big blow to their competitor Zoom, who is making a lot of money right now with video conferencing, and stock has been going up almost to 175. But now the Zoom stock has gone down because of this news. So what about the stock price? The stock price of Facebook is 190 on Friday, was up by $5 because of those couple of positive news, has gone up to 224 in January, and the low was $137. So last as you can see, the stock buybacks, company management has been buying back stock at $137, but no debt on the balance sheet, and they have not been paying any dividends, so that helps the company to retain all those profits. Strong balance sheet. So in the end, should you invest in Facebook or not? As I mentioned, Facebook stock, after touching low of 154 on April 3rd, has gone up by $33 in last 20 days. So that is a big plus. Plus has gone up to 224 in last 52 weeks, as recent as January. So just 3 months back it was 224, and now it's 190. and earnings coming up this week. So I would recommend at least buy for short term to get at least $10 to $15 in 3 months. And if you don't want to buy the stock, you can also buy the call for January 21, 2022 with the strike price 350 and your exposure is only $350. Remember, this is an election year, so definitely will benefit Facebook. That's it from me, and I'll be back tomorrow. Take care and be safe.